So good evening, Excellencies, distinguished speakers, ladies and gentlemen. Welcome to this Economist Impact Gala dinner with a focus on the outlook for the global economy and financial services in particular. This event is being held under the auspices of the British Embassy in Athens, thank you, and in partnership with the British Hellenic Chamber of Commerce. Thank you very much. It's really great to see so many of you in the room this evening. My name is Joan Hoey. I am the Senior Analyst for Greece at the Economist Intelligence Unit and the editor of the Economist's annual Democracy Index, and I'm your moderator this evening. The failure earlier this year of several US banks and of Credit Suisse in Europe has raised fears of another financial crisis of the type we saw more than a decade ago. And this evening we will consider whether these fears are justified or not. We're honored to have 6 distinguished speakers to share their insights about the state of the world economy and where we're heading over the coming year. First, I'm going to give a very brief presentation of the Economist's forecast for the global economy, for Europe, and for Greece. So I've got a PowerPoint presentation, a few slides, which I'm going to go through very quickly. And I'm going to start with the war in Ukraine. I think it's clear to everybody now that geopolitics have become a major driver of trends in the global economy. So we need to start with our assumptions about the war in Ukraine. Now, at the moment, all eyes are focused on Ukraine's counteroffensive, long-awaited counteroffensive, which is now got underway. And many people hope that that will lead to a decisive shift in the war, an eventual ceasefire, and a settlement of this already long-running conflict. However, our assumption since the very first days of the war is that this would be a long war, with both sides seeing this conflict as existential, but neither being able to impose a decisive defeat on the other. And that, alas, remains our view now. And I think we all need to really think through the consequences of that for the global economy. One consequence, I think, is already becoming quite clear, and that's that the world is beginning to divide into blocks. And that shift was already evident before the Russian invasion. The war has simply accelerated some already existing trends. So we're seeing a bifurcation taking place. Still has a long way to go, but it's certainly the case that that has speeded up over the past year or two. Russia has now been essentially excluded from commerce with the developed world. Sanctions are here to stay for a very long time, and what we will see is growing dependency of Russia on China. We also see that Russia and China are investing very heavily diplomatically in wooing the developing world, most of which is staying neutral in this conflict. And so what we're seeing is both what I would say is a north-south divide between the developed and developing world to some degree, as well as an east-west divide in terms of the shift of global economic power to the east as well. Now, the fallout from the war has been greatest in Europe, which has been in the front line of the conflict. And it's had major impact both on supply, in terms of supply of energy, raw materials, and food, and also on demand. So we've had a trade shock, we've had a confidence shock over the past year or so. The impact has also been uneven across Europe. We've seen that Germany has been hit hardest, and that's because the German industrial model really was so highly dependent on supply of energy from Russia. And obviously, when Germany catches a cold, Eastern Europe also tends to do quite badly as well. So that part of the region has found it much more difficult to cope with the fallout from the war in Ukraine. But at the same time, I think it's not all bad news. The adjustment that is taking place in Europe has happened probably much faster than many people expected. So we're seeing new LNG terminals coming online, new energy suppliers in Europe, and the shift away from Russia, which has been very, very painful, but maybe not as painful as some people expected. However, the war is presenting a challenge for Europe's competitiveness, and as I say, especially for Germany's industrial model. The good news is that the Eurozone avoided a recession in the winter of 2022 to 23, owing really to low energy demand amid quite warm temperatures over the winter. But what's happening this year for sure is that high inflation and high interest rates are really weighing on spending, and that means that the Eurozone is going to record pretty anemic growth this year. Our forecast is for growth in the Eurozone of 0.8% real GDP growth on average. In terms of the global implications of the war, I think they've all become quite familiar to people in this room over the past year. We're still feeling the effects of very high commodities prices, spiking global inflation, and monetary policy tightening. And that's all having an impact on growth. We're not forecasting a recession. There will be a recession in some countries in 2023, but overall, we're not forecasting a recession in Europe, and nor are we forecasting a global recession. But nevertheless, it's going to be quite a tough year. Central bankers have been hiking rates very aggressively to try to tame inflation. We expect an end to that tightening from the middle of the year. In terms of the impact on growth, as I say, we expect growth to remain subdued in 2023 at 2.1% globally on average. The one place which is booming at the moment is China. After the end of the zero COVID policies of the past few years, we're forecasting growth of 6.1% in China this year. So we've got a consumer-led recovery going on, a lot of pent-up demand for services being released in China. So as I say, we assess the risk of a recession as low, but it really is going to be a tale of two halves. So very more difficult first half of 2023, and then a pickup in growth, a rebound in the second half of the year. There are risks, however, and I think we'll be hearing about those later from our speakers. There are risks of bank defaults. There's risks from a possible escalation of the war in Ukraine, from sovereign debt pile-ups and problems. So this is going to pose lots of challenges over the coming year and into 2024. If we want to take a look at how growth looks like globally, what you see here on this chart, the purple colors, which I think the only purple one there is probably Russia. We're talking, the purple color is negative growth. Blue colors, blue-green colors are fairly anemic growth, and orange and red is where the more robust growth rates are going to occur. And so you can see that's mainly there in the east. The big question which I hope our speakers are going to answer later, is when is global inflation going to recede and will prices begin to drop? Our view is that that's not going to happen for a long time. Inflation averaged 9.2% in 2022. It's only going to slow, in our view, to about 7% in 2023, and it's going to remain much higher in some places in Europe. And even if inflation begins to really decelerate in the second half of the year, prices are going to remain at high levels. They're not going to return to pre-war or pre-pandemic levels for a very long time. I want to finish just to say a few things about Greece, because actually, in comparison with its peers in the region, Greece is performing very well. Now, we're heading into a second election at the end of this week. Our assumption for some time has been that we will see the return of a majority government, New Democracy government, with a comfortable majority in Parliament, and therefore a continuation of the reform agenda that we've seen in recent years, which has restored investor confidence in Greece. First quarter growth in Greece, quarter on quarter, it was actually minus 0.1%. Year on year, it was 2.1%. But if you look below the headline numbers of what was going on, it actually paints a much more positive picture, because all the pressure on the headline rate was entirely due to a sharp fall in inventories that shaved 3.8 percentage points off the headline growth rate. But if you look at private consumption, it was positive. It was 1.4%. That's despite inflation, despite high interest rates. We also saw government consumption of around 2%, 2.1%. And we saw exports of goods and services performing very strongly, 5.7%. We expect gross fixed investment, which was negative quarter on quarter in Q1, to rebound. We expect a very strong tourism year again in Greece, and we expect a very positive impact from absorption of EU funds. So in our view, Greece will continue to outperform its peers in Europe in terms of growth, and also in terms of the pace of the reduction in inflation. So ending on a positive note on Greece, I would like now to invite to the stage our first speaker, Anna Kalyani, who is the president of the British Hellenic Chamber of Commerce. Welcome.